This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. Treasury yields fell back from one-year highs on Thursday as worries about higher inflation and Fed tightening subsided somewhat. The Federal Reserve played down the growing threat of inflation, making a comeback in its January meeting minutes yesterday, and tried to allay concerns about an early tapering of asset purchases. Long-dated Treasury yields steadied after the minutes, having already started to retreat earlier in the day. The Fed's assurances lifted some stocks on Wall Street, but not all. Although the reflation trade has generally been positive for equities, the recent spike in yields has turned the spotlight on the sky-high valuations of companies that have benefited the most from the almost one-year-old risk rally, namely the tech giants. There's been a bit of a rotation taking place this week out of tech stocks and into cyclicals, which stand to gain more from the recovery when economies fully reopen. The Dow Jones Industrial Average rose for a third straight day on Wednesday, but both the S&P 500 and Nasdaq Composite closed in the red. It's a mixed session so far in Europe, and U.S. E-mini futures point to modest losses on Wall Street today. While stocks seem to be lacking direction, the U.S. dollar is resisting the slide in Treasury yields, having surged yesterday on the back of stronger than expected data out of the U.S. Retail sales shot higher in January as Americans started to receive their $600 stimulus checks, and producer prices and industrial production also rose more than forecast. The Upbeat data could be a glimpse as to what to expect when the next stimulus package arrives. The dollar was last trading down on the day against a basket of currencies, but not too far off from Wednesday's one-week top of 91.06. The euro has perked up today after 2 straight days of losses, and the pound was also back in a buoyant mood. But the Canadian dollar continued to struggle with the ongoing ascent in oil prices, providing only limited support. Both WTI and Brent crude powered ahead to levels last seen in early January 2020. The deep freeze engulfing the Permian Basin in the United States has cut oil production by almost 40%, and the disruptions could last for several more weeks. This was today's Daily Market Comment. Thanks for joining us at XM.com.